Welcome to my channel CAFinal Academy, and today we will deal with all the standards on auditing so as to have an overall concept clarity, right? And during the examinations, we'll first understand what each concept means, each standard means clearly and in a simplified manner, so that during the examinations we can understand clearly and we can score more marks in standards. Okay. Essay 200. We first will do the S200 series. Essay 200. What does it say? Overall objectives of the independent auditor. So Essay 200 lays down the overall objectives of an independent auditor and explains the nature and scope of an audit conducted in accordance with the standards on auditing. What are the objectives of Essay 200? The objectives of the auditor is to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error, and to report on the financial statements. Okay. What does as reasonable assurance means? Reasonable assurance is a high but not absolute level of assurance due to some inherent limitations of audit. What are the inherent limitations of audit? Inherent limitations arise due to some reasons: use of judgment, use of sampling, possibility of fraud and collusion, management override of controls. These are the reasons which led to inherent limitations and due to which the assurance given by the auditor is reasonable assurance rate. Now, auditor's responsibility now is to apply professional skepticism. So, auditor must maintain professional skepticism throughout the audit, from starting to the end of the audit. Whole time he has to be alert that there may be some fraud or error, okay, and he has to keep an effort that there may be some type of collusion. Management override of control, okay. Then professional judgment. Auditor applies professional judgment in planning and performing the audit. Above that, we have the ethical requirements of also. So auditor must comply with the ethical requirements, okay, including the independence of the auditor. Okay, so conduct of the audit in accordance with the essays has to be done, and auditor shall comply, okay, with all the applicable standards on auditing relevant to that audit. So audit risk. Now there is an audit risk. Why? Because audit risk is the risk that the auditor expresses an inappropriate opinion when the financial statements are materially misstated. So audit risk is that the risk that the auditor expresses an inappropriate opinion. Okay, opinion is not appropriate when the financial statements are materially misstated. Thus, Essay 200 forms the foundation of auditing standards, right? Guiding the auditor to perform an audit with professional skepticism, judgment, and ethical compliance to express a reliable audit opinion. In one word, we can say Essay 200 defines why and how an audit is performed. Okay. Some important keywords for this particular essay 200 is reasonable assurance, fraud and error, professional skepticism, professional judgment, audit risk, and inherent limitations. When you're writing any answer where essay 200 is there, you have to write this keyword so as to get more marks. Okay. Then we will deal with essay 210, that is agreeing the terms of audit engagement. Okay. Essay 210 explains how and when the auditor should agree on the terms of audit engagement with management or those charged with governance. The preconditions for an audit. As per Essay 210, before accepting an audit engagement, the auditor must ensure: first, financial statements are prepared using an acceptable financial reporting framework, and management acknowledges its responsibility for preparation of financial statements, internal control, and providing access to information. Without these preconditions, audit engagement cannot be accepted. Audit engagement letter. Once preconditions are satisfied, auditor issue an audit engagement letter which includes objective and scope of audit, auditor's responsibilities, management's responsibilities, reference to applicable standards on auditing. Okay. Recurring audits. For recurring audits, a new engagement letter is not required every year unless circumstances change. Okay. Essay 210 ensures clarity of responsibilities between auditor and management before commencement of the audit. So one line we can say: no preconditions, no audit engagement. Then we move on to Essay 220, which deals with quality control for audit of financial statements. SA 220 डील्स ऑडिट का रिस्पॉन्सिबिलिटी किस पर होता है? हु इज दैट पर्सन इज द एंगेजमेंट पार्टनर. सो एंगेजमेंट पार्टनर इज फुल्ली रिस्पॉन्सिबल फॉर द ऑडिट. SA 220 ऑडिट एंगेजमेंट के लिए कंट्रोल की रिक्वायरमेंट्स बताती है. मीन्स इट टेल्स अस हाउ मच importance and what are the requirements. Engagement partner ensure that it includes direction, supervision, review of the audit work. Team members are whether they are competent and whether they have independence to evaluate which work is being done and what is the importance of line. Okay, the importance here is engagement partner. He ethical compliance, direction, supervision, review, and the audit quality. The quality is also to be ensured as per SA 220. Okay, so quality control, introduction, we can say SA 220 deals with the specific responsibilities of the auditor regarding quality control at the engagement level for an audit of financial statements. So, quality control at the engagement level for an audit of financial statements. What are the objectives? The objective of the audit is to implement quality control procedures at the engagement level to ensure that the audit complies with standards on auditing and the auditor's report is appropriate in the circumstances. Then we have the responsibility of the engagement partner. That is a very important here. The engagement partner has overall responsibility for the audit quality, direction, supervision, and review of the audit work, compliance with ethical requirements. All these are the responsibility of the engagement partner. Right. Ethical requirements. The engagement partner shall ensure compliance with ethical requirements, including independence, integrity, objectivity, right, professional competence, and due care. These are the ethical requirements there should be. Okay, independence, integrity, objectivity, and professional competence and due care. Acceptance and continuance of client relationship. The auditor should ensure that the audit team is competent. There are no issues affecting the integrity of the management also. Assignment of audit team. Audit team members should have appropriate competence and capabilities, adequate time to perform the audit also. Direction, supervision, and review. The engagement partner shall ensure proper direction to the audit team. Supervision of the work has to be done, and review of the audit documentation and conclusions from time to time. Engagement quality control review, EQCR. For certain engagements, an EQCR is required. Review will be required before issuing the audit report. Okay, then in that cases, EQCR has to be issued. Documentation. The auditor shall document issues identified regarding the quality, okay, and conclusions reached. So we can say SA 220 ensures that audit quality is maintained at the engagement level through effective leadership, ethical compliance, and proper supervision and review. Okay, in one word we can say SA 220 is equal to engagement partner plus ethics plus quality. So engagement partner, ethics, and quality. Responsibilities of the engagement partner. Okay, what are the ethics has to follow and the quality of the audit. Then comes SA 230, that is audit documentation, which deals with audit documentation. Meaning of audit documentation, SA 230 deals with the auditor's responsibility to prepare audit documentation that provides a sufficient and appropriate record of the basis for the auditor's report. Okay, and evidence that the audit was planned and performed in accordance with the standards on auditing. Objectives of SA 230. The objectives of the auditor is to prepare documentation that enables an experienced auditor to understand the nature, timings, and the extent of audit procedures. Support the auditor's conclusions. Form, content, and extent of documentation. Audit documentation depends on the size and complexity of the entity, nature of the audit procedures performed, identified risks of material misstatement, significant matters arising during the audit. Now comes the audit working papers. Audit documentation is also known as audit working papers, which may be permanent file or current audit file in physical or electronic form. The auditor shall document the significant matters, professional judgments made, conclusions reached, discussions with management, and those charged with governance. All these have to be documented by the auditor. Assembly and retention of the audit file. The audit file should be assembled within 60 days after the date of the auditor's report. Okay, so it will be assembled within 60 days after the date of the auditor's report. And audit documentation should be retained for at least 7 years. Okay, the documentation have to be retained for 7 years. Okay, now ownership and confidentiality. Audit documentation is the property of the auditor. The auditor shall maintain confidentiality unless disclosure is required by law. So we can say in conclusion that SA 230 ensures proper audit documentation, which serves as the evidence of audit work performed and supports the auditor's opinion. Okay. Mention the 60 days after the audit is put, it has to be prepared within that, assembled have to be then, and retention for 7 years. Okay, write the experienced auditor test and use sufficient and appropriate documentation words. This, if you use these words, you will score more marks. Sufficient and appropriate documentation. Then comes SA 240, auditor's responsibility related to audit. Introduction. SA 240 deals with the auditor's responsibility relating to fraud in an audit of financial statements and expands on how SA 200 applies in relation to fraud. SA 240 ऑडिट के दौरान फ्रॉड को रिलेट करती है. मीनिंग ऑफ फ्रॉड. फ्रॉड इज एन इंटेंशनल एक्ट by management, those charged with governance, employees or third parties involving deception to obtain an unjust or illegal advantage. Types of fraud. Fraudulent financial reporting, manipulation of falsification of records, intentional misapplication of accounting principles, misappropriation of assets, theft of cash or inventory, unauthorized use of company assets. Okay, so responsibility of management versus the auditor. The primary responsibility of prevention and detection of fraud lies with that of management and those charged with governance. Auditor's responsibility is to obtain reasonable assurance that financial statements are free from material misstatements due to fraud. Then professional skepticism is very important point here to be mentioned. The auditor shall maintain professional skepticism throughout the audit, recognizing the possibility that material misstatement due to fraud may exist. Presumed risk and revenue recognition. SA 240 presumes that there is a risk of fraud in revenue recognition unless the auditor can rebut this presumption. Auditor's procedures relating to fraud. The auditor shall perform risk assessment procedures, identify and assess the fraud risks, design and perform responses to assessed risks, obtain sufficient and appropriate audit evidence. These are the responsibility of the auditor. Now, communication documentation. Fraud involving management shall be communicated to those charged with governance. Auditor shall document fraud risk assessment and responses. All documentation done. Okay. SA 240 requires the auditor to maintain professional skepticism and perform audit procedures to obtain reasonable assurance that the financial statements are free from material misstatement due to fraud. So SA 250, we can say in one word memory key, fraud is equal to intentional and revenue is equal to presumed risk and skepticism is equal to mandatory. Okay. So always link SA 240 with SA 200, mention the types of frauds, okay, and write revenue recognition as a risk clearly. Then comes SA 250. Consideration of laws and regulations. SA 250 deals with the auditor's responsibility to consider laws and regulations while performing an audit of financial statements. The objectives of SA 250, the objective of auditor is to obtain sufficient and appropriate audit evidence regarding compliance with laws and regulations that have a direct effect on financial statements and identify instances of non-compliance that may have a material effect on the financial statements. Types of laws and regulations, very important. Laws having direct effect like Income Tax Act, GST, Customs Law. Direct impact on amounts and disclosures in financial statements. Then laws having indirect effect like labor laws, environmental laws, company law provisions other than accounting. No direct impact but may cause penalties or liabilities. Responsibility of management versus auditor. The primary responsibility for compliance lies with that of the management and those charged with governance. Auditor is responsible to remain alert to non-compliance affecting the financial statements. Auditor's procedures under SA 250. The auditor shall obtain understanding of applicable laws, inquire with management, inspect correspondence with regulatory authorities, perform substantive procedures if non-compliance is suspected. Repeating of non-compliance, material non-compliance, modify audit opinion, fraud or serious matter, communicate to those charged with governance or authorities if required by law. So we can say SA 250 requires the auditor to consider the effect of laws and regulations on financial statements and respond appropriately to identified non-compliance. SA 250 auditor को legal compliance पर electronic को help करता है. So we can say SA 250 is equal to laws plus compliance plus material impact. Okay. Now next comes SA 260, communication with those charged with governance. Okay. SA 260, communication with those charged with governance. What does it mean? SA 260 deals with the auditor's responsibility to communicate clearly and timely with those charged with governance in relation to matters arising from the audit. Any matter which is arising from the audit and which needs the attention of those charged with governance have to be reported by the auditor to those charged with governance. The objective of auditor is to establish effective two-way communication with those charged with governance and enable those charged with governance to oversee the financial reporting process. Who are those charged with governance? Those charged with governance are persons or bodies with responsibility for oversight of financial reporting, strategic direction of the entity, examples board of directors, audit committee. Okay. Matters to be communicated, very important here. The auditor shall communicate auditor's responsibility in the audit, planned scope and timing of audit, significant audit findings, significant deficiencies in internal control, auditor's independence and ethical compliance. Okay. Form and timing of communication. The communication may be oral or written. Significant matters should generally be communicated in writing. Communication should be timely also. So documentation now comes. It's very important for this. What here? The auditor shall document matters communicated when and to whom they were communicated. What matters are communicated as well as to whom and when they were communicated. That all has to be documented properly. So SA 260 ensures effective communication between the auditor and those charged with governance to enhance the audit quality and financial reporting oversight. SA 260 just gives us a base on which helps the auditor on TC, those charged with governance, there is transparency between the two and clarity is also there in the audit work. Now comes SA 265. Okay. Communicating deficiencies in internal control. It deals with communicating the deficiencies in internal control. SA 265 deals with the auditor's responsibility to communicate appropriately to management and those charged with governance deficiencies in the internal control identified during the audit work. The objectives of SA 265. The objective of the auditor is to communicate significant deficiencies in internal control and other deficiencies that are important enough to merit. Okay. Meaning of deficiency in internal control. A deficiency in internal control exists when a control is designed, implemented, or operated in such a way that it is unable to prevent, detect, or correct misstatements on a timely basis, right? Significant deficiency. A significant deficiency is a deficiency or a combination of deficiencies in internal control that is important enough to merit the attention of those charged with governance. The responsibility of the auditor here. The auditor shall evaluate identified deficiencies, determine whether they are significant, communicate them appropriately. Okay, so he has to first evaluate identified deficiencies, then he has to determine whether they are significant or not, and then communicate them appropriately to those charged with governance. To whom? To significant deficiencies to those charged with governance. Other deficiencies to management. So any deficiency which is significant, that will be communicated to those charged with governance, and which the other deficiencies other than the significant ones will be communicated to the management. Significant deficiencies in writing have to be done, and timely communication is a must. Rational with other essays. Essay 265 complements Essay 260, which deals with communication with those charged with governance. Essay 265 and Essay 260 both relate to communications. Okay. So we can say in conclusion that Essay 265 ensures that deficiencies in internal control identified during the audit are communicated to management and those charged with governance to enable corrective actions. Then we move on to Essay 315. We will do 299 after this essay. So Essay 315, identifying and assessing the risk of material misstatement. Okay. What does it mean? Essay 315 deals with the auditor's responsibility to identify and assess the risk of material misstatement, whether due to fraud or error at the financial statement level and assertion level. Okay. What are the objectives of Essay 315? The objective of the auditor is to obtain an understanding of the entity and its environment, the applicable financial reporting framework, and the entity's internal control to provide a basis for designing and implementing responses to assessed risks. Assessed risks we will read in Essay 330 later on. Essay 315 has identified risk. Auditor identifies the risk. How? Risk assessment procedures. The auditor shall perform inquiries of management and others, then perform analytical procedures, and after having observations and inspections, auditor inquiry, analysis, all these things have to be done by the auditor to come to the conclusions. This includes understanding of the nature of the business, the understanding of the entity and environment. This includes understanding of the nature of the business, industry, and the regulatory factors, objective strategies, and related business risks with that particular entity and its environment. Second, understanding the internal control. Auditors shall understand control environment, risk assessment procedures, process, information system, control activities are there or not, and monitoring of the controls, whether the controls are working properly or not, that have to be monitored also. Okay. Levels at which risks are identified. Financial statement level, assertion level. Financial statement level, risks that affect the financial statements as a whole, such as management integrity issue, weak control environment. Okay. And assertion level, risk relating to classes of transactions, account balances, disclosures. Okay. Significant risk. We have to know what are the significant risks. Okay. The auditor shall determine whether any of the identified risks are significant risk or not, which requires special audit consideration. Examples: revenue recognition, management override of controls. Okay. Now, risk of material misstatement, RMM, what we also called as RMM, that is risk of material misstatement. Risk of material misstatement consists of inherent risk and control risk. Inherent risk and control risk. Material misstatement is equal to inherent risk plus control risk. Documentation is required for this. The auditor shall document identified and assessed risks, significant risk identified, understanding of the entity and the internal control which is operating there. Okay. So we can say that Essay 265 we have done just now. Those charged with governance, communication, and those charged with management have to be communicated to the important documents. Essay 315 requires the auditor to identify and assess the risks of material misstatement by obtaining an understanding of the entity, its environment, and internal controls, forming the basis for further audit procedures. So we can say a memory key: understand, the identify, then assess the risk, then respond as per Essay 330. So mention the financial statement level and assertion level, risk and significant risk examples. Then we are going to do the Essay 299, that is responsibility of joint auditors. Essay 299 deals with the responsibility of joint auditors when two or more auditors are appointed to conduct an audit jointly. And the responsibilities defines which responsibility is whose. The objective is to establish clear allocation of work, ensure coordination, and define the extent of responsibility of each joint auditor. Division of audit work, very important. Joint auditors shall divide audit work among themselves by mutual discussion. The division should be clearly defined, preferably documented in writing. Joint responsibility, each joint auditor, individual responsibility. Each joint auditor is solely responsible for the work allocated to him and conclusions drawn on that portion. And joint responsibility, auditors are jointly and severely responsible for overall audit opinion, compliance with standards on auditing, matters not specifically allocated. Okay, so that is the joint responsibility, right? Coordination and communication. Joint auditors should exchange information, coordinate planning, right? Discuss significant audit findings. All these things have to be exchanged by the joint auditors. They should be communicating among themselves. Proper communication and coordination should be there. Disagreement between joint auditors. If joint auditors disagree, the matter should be discussed. If unresolved, each auditor may express a separate opinion in the audit report. If it is resolved, then we will say about the resolved matter. But if it is not resolved, then each and everybody should express a separate opinion in the auditor's report. Reporting by joint auditors. Normally a single joint audit report is issued and signed by all the joint auditors. Okay. Now we can say SC 299 ensures clarity in division of work and defines individual as well as joint audit responsibility of auditors in a joint audit engagement. Okay. SC 299 joint audit says that jointly responsible means ensures clarity of the division of work and defines individual as well as the joint responsibility of each and every auditor in a joint audit engagement. Use the keywords like sole responsibility, joint and civil responsibility, mention written division of work, right? And add points on disagreement and separate reports. Okay. Then we are going to deal with SA 320, okay, which deals with materiality in planning and performing an audit. SA 320, materiality in planning and performing an audit, deals when we audit financial statements. We don't check each and every rupee. Instead, we focus on what really matters to users of financial statements. That concept is called materiality. Okay. So whatever is material have to be accounted for. What SA 320 talks about? Okay. So let's do it in details. SA 320 deals with how the auditor determines and applies materiality while planning the audit and while performing the audit procedures. Okay, while planning work time as well as the procedures being carried out, at that time also he has to determine and apply the materiality. Okay, meaning of materiality. What does it mean? Materiality, including omissions, are considered material if they could reasonably be expected to influence the economic decision of users taken on the basis of financial statements. Why materiality is important? Just think like an auditor. Materiality helps the auditor to decide how much audit evidence is enough, identify the risky areas, plan audit procedures efficiently. Okay, so we can say all these things are helped for why materiality is important. Okay, then levels of materiality. Overall materiality. First case, what does it mean? Overall materiality is set for the financial statement as a whole, right? So if the materiality is shown for the whole financial statement as a whole, then it will be overall materiality. Then performance materiality. Performance materiality is set lower than the overall materiality to reduce the risk that aggregate uncorrected misstatements exceed overall materiality. Okay. So what is uncorrected misstatements? That is more than when performance materiality is safe because we know the limitations. Okay. Factors affecting materiality. What are the factors which affect the materiality of a materiality? Depends on size of the entity, nature of the misstatements, users' expectations, right? Profit, revenue, assets, etc. Okay. So we can say that materiality helps us in many ways in forming the base. Okay. Revision of materiality. The auditor shall revise materiality if during the audit new information comes to light. If new information is coming, then we have to add it to it. So relationship with audit risk, link with SA 315 and 330. Materiality and audit risk are inversely related. Lower materiality, more audit work. Okay, so it is inversely related. The more will be the lower the materiality, more audit work. Higher the materiality, then we don't need so much audit work. Okay, so SA 320 requires the auditor to apply materiality appropriately in planning and performing the audit to obtain reasonable assurance that the financial statements are free from material misstatements. Some keywords which you have to remember: material decides focus, effort, and evidence. Decides what does materiality help? Help in focusing in efforts and evidence. Okay. For the keywords, light overall versus performance materiality, mentioned that link with SA 315 and 330 also. Okay. Now we say that SA 330 auditors response to assessed risk. SA 330 response to assessed risk. Considerations expected by ICAI. The SA 330 auditors response to assessed risk. What does it say? Once risks are identified under SA 315, the next natural question is, now what should the auditor do? This is where SA 330 comes in. SA 330 guides the auditor on how to design and perform audit procedures in response to the assessed risk of material misstatement, whether due to fraud or error, at financial statement level and assertion level. So objective of SA 330, the objective of the auditor is to obtain sufficient and appropriate audit evidence by designing and implementing appropriate response to assessed risk so as to reduce audit risk to all level. So overall responses to risks at financial statement level, these responses affect the overall conduct of the audit, not a single account. Examples of overall responses: assigning more experienced audit staff, increasing professional skepticism, changing nature, timing or extent of procedures, and emphasizing supervision and review. Purpose: to address pervasive risks affecting the entire financial statements. Now we respond to risk at assertion level. At this level, the auditor designs specific audit procedures for classes of transactions, account balances, disclosures. These responses include tests of controls and substantive procedures. Test of controls, what do we mean? When a test of control performed, auditor shall perform tests of controls when auditor intends to rely on controls, or the key considerations. Okay, nature of control, frequency of control operations, evidence of operating effectiveness. If controls are found ineffective, increase substantive procedures. Substantive procedures is very important here. SA 330 clearly states substantive procedures shall be performed for all material class of transactions, balances and disclosures, irrespective of control reliance. These substantive procedures, substantive analysis procedures, test of details. Okay, significant risk. For significant risk, substantive procedures must be performed. Reliance only on analytical procedures is not allowed. Examples you can say: fraud risk, management override complex estimates. Timing of audit procedures. Procedures closer to year end provides more reliable evidence. Interim procedures must be updated. Roll forward procedures are required when interim testing is done. Extent of audit procedures. Extent depends on the level of assessed risk, materiality, effectiveness of control. Higher the risk, more evidence required. Revision of risk assessment. If auditor evidence contradicts earlier risk assessment, auditor must revise the risk assessment. Modify planned audit procedures. Risk assessment is dynamic, not static. Evaluation of audit evidence. Auditors shall evaluate whether sufficient and appropriate audit evidence has been obtained. Further procedures are required. Audit risk is reduced to an acceptable low level. Okay. Documentation link with SA 230. It is very important. Auditor must document overall response to risk, nature, timing and extent of link between assessed risk and audit response, results and conclusions reached. SA 330 ensures that risk assessment is not just theoretical but is converted into practical, targeted and effective audit procedures, thereby enhancing audit quality and also the reliability of the audit opinion. So we can say overall audit responses, risks at financial statement level and assertion level, tests of control, substantive procedures, significant risk, nature, timing and extent, professional skepticism, sufficient appropriate audit evidence. So these are the keywords which you have to use for this audit as standards on audit. Now we have SA 250. Okay, now we have this SA 450, evaluation of misstatements, designed exclusively for during an audit. Mistakes are normal, okay? Some are small, some are big, but every mistake tells a story. The real responsibility of the auditor is not just to detect misstatements, but to evaluate the impact on the financial statements as a whole. This responsibility is governed by SA 450. What are the objectives of SA 450? The objective of the auditor is to evaluate the effect of identified misstatements on the audit and the effect of uncorrected misstatements, if any, on the financial statements. Okay. What is a misstatement? A misstatement means difference in amount, difference in classification, difference in presentation or disclosure between the what is reported and what is required by the applicable financial reporting framework. Types of misstatements. Factual misstatements, clearly identified errors, no judgment involved. Example, wrong totaling, incorrect invoice posting. Okay. Judgmental misstatements arise from management's judgments, difference in estimates or accounting policies. Examples we can say provision estimation differences. Then we have projected misstatements. Auditor's best estimate of misstatements is in a population based on audit sampling, and audit example we can say sample errors extrapolated to full population. Accumulation of misstatements. SA 450 requires the auditor to accumulate all misstatements identified during audit except those that are clearly trivial. Clearly trivial means not material. Evaluation of misstatements. At the end of the audit, the auditor evaluates whether individual misstatements are material or considerations include size, that is qualitative aspect, nature, that is quantitative aspect, and circumstances of occurrence. Communication with management. Auditor shall communicate all misstatements to management. Request management to correct the misstatements. If management now refuses, auditor shall obtain an understanding of reasons, re-evaluate the materiality. Communication with those charged with governance, linked with SA 260. Uncorrected misstatements, effect on audit opinion, and qualitative aspects of accounting practices. So documentation of communication is mandatory. Reassessment of materiality. If misstatements are identified, auditor must reassess materiality, especially performance materiality, to determine if audit strategy needs revision or not. Written representations. Auditor shall obtain written representations from management stating that effects of uncorrected misstatements are immaterial individually and in aggregate. Mandatory requirements under SA 450. We have to do that. Or documentation is a must. Auditor must document amount of misstatements, corrected versus uncorrected misstatements. Okay. Management's responses. So, in conclusion, we can say SA 450 ensures that the auditor does not ignore small mistake, but because small errors when combined can distort it reinforces the principle that professional judgment and skepticism are critical till the end of the audit. So we can have some important keywords for this 450. Accumulation of misstatements, clearly trivial, future, factual, judgmental and projected misstatements, quantitative and qualitative factors, uncorrected misstatements, written representations, and reassessment of materiality. Now we go on to, we have completed SA 450, then we will go on to 500 series, that is audit evidence. What does it mean? Okay. In auditing, opinion is never based on assumptions, it is based on evidence. An auditor may have experience, intuition and professional judgment, but without audit evidence, an audit opinion has no value. This core principle of auditing is governed by SA 500, that is audit evidence. What are the objectives of SA 500? The objective of the auditor is to design and perform audit procedures so as to obtain sufficient and appropriate audit evidence to enable the auditor to draw reasonable conclusions on which to base auditor's opinion. What is audit evidence? Audit evidence includes information used by the auditor to arrive at conclusions and accounting records and information contained in the accounting records and other sources, internal and external. Audit evidence is both quantitative and qualitative. Sufficient versus appropriate. Sufficient means quantity of evidence refers to how much an evidence is needed. It depends on assessed risk of material misstatement. Quality of evidence. Higher risk is more evidence required, and appropriateness, if we want to speak about it, Quality of evidence refers to relevance and reliability of evidence. High quality evidence may reduce the need for large quantity. Reliability of audit evidence. Reliability depends on source and nature. Evidence is more reliable when obtained from independent external sources, generated under effective internal controls, obtained directly by the auditor, and in documentary form rather than oral. So we can say original documents rather than photocopies. Source of audit evidence: internal sources, accounting records, internal reports, management explanations; external sources, bank confirmations, suppliers statements, legal confirmations. External evidence is generally more reliable. Audit procedures to obtain evidence. SA 500 recognize the following procedures: inspection, examining records of assets; observation, watching a process being performed; inquiry, seeking information from knowledgeable persons; recalculation, checking mathematical accuracy; analytical procedures, evaluating relationships. No single procedure provides sufficient evidence alone. Information produced by the entity. When using information produced by the entity, auditor must evaluate accuracy and completeness of the information, controls over preparation of information. Blind reliance is not allowed. Management presentation linked with SA 580. Management presentations are audit evidence, but alone they are not sufficient. They must be supported by other audit evidences. This is a common thing which we have to remember. Consistency and contradictory evidence. If audit evidence is inconsistent or contradict other evidence with other evidence, then auditor must perform additional procedures, resolve inconsistency before forming opinion. Documentation is also must. Auditor must document procedures performed, evidence obtained, conclusions reached. If it is not documented, it is not audited. SA 500 forms the backbone of auditing because the quality of the audit opinion depends entirely on the sufficiency and appropriateness of the audit evidence obtained. It reinforces that professional judgment, skepticism, and evidence go hand in hand. Okay, so it goes hand in hand with the appropriate audit process. Sufficient and important keywords for this essays: sufficient and appropriate audit evidence, reliability of audit evidence, external versus internal evidence, audit procedures, information produced by the entity, and management presentations. Okay, so we have completed essay 500, and then we will go on to essay 501. Now we will do essay 501, audit evidence, specific considerations for selected items. Okay. Essay 500, specific consideration for selected items, deals in audit. Not all items need the same kind of evidence. Some areas are highly sensitive, judgmental, or prone to manipulation, like inventory, litigations, or segment information. To deal with such areas, ICAI gives us Essay 501, which supplements Essay 500 by prescribing specific audit procedures for selected items. Objective of Essay 501. The objective of the auditor is to obtain sufficient and appropriate audit evidence regarding selected items where specific considerations apply. So we can say Essay 501 specifically deals with audit evidence relating to inventory, litigation and claims, segment information. Inventory, first case, inventory is usually material and susceptible to fraud or error. Inventory is usually material and susceptible to fraud and error. Therefore, Essay 501 prescribes mandatory procedures. Auditor's responsibility: physical verification of inventory. Auditor shall attend physical inventory counting unless impracticable, evaluate management's instructions and procedures, observe accounting process, perform tests counts, inspect inventory condition. Attendance provides evidence about existence and condition. Inventory at locations not attended. If inventory is held at multiple locations, auditor attends material locations. For others, apply alternative audit procedures. Inventory under custody of third parties. Auditor shall obtain confirmation from third parties or perform inspection, other appropriate procedures. Example, inventory with the warehouse, consignment stock, etc. Then litigation and claims. Okay, for litigation and claims purpose, auditor shall obtain evidence by inquiring with management, reviewing minutes of meetings, examining correspondence with legal advisors, reviewing expense accounts for legal costs, obtaining direct communication with entities' lawyers where required. Objective is to assess existence, completeness, evaluation, and disclosure. Segment information. Segment information is often based on management judgment, prone to classification and disclosure errors. Now, auditor's responsibilities are: auditor shall obtain understanding the methods used by management, evaluate consistency with financial statements, test mathematical accuracy, assess compliance with applicable reporting framework. Segment information must reconcile with other overall financial data. Professional skepticism. This is very important here. Across all selected items, auditor must apply professional judgment, professional skepticism, heightened alertness to fraud indicators. Okay. Documentation. Here there is a link with SA 230. Auditor must document procedures performed, evidence obtained, conclusions reached, reasons where physical attendance was impracticable. There are linkage with many other essays like SA 500 audit evidence based standard, SA 505 external confirmations, 580 written representations, 315 and S3 risk assessment and responses. In conclusion, we can say SA 501 ensures that high risk and sensitive audit areas receive special attention so that the auditor's opinion is backed by strong, reliable and specific audit evidence. It reinforces that one audit approach does not fit all items. Some items demand extra care, extra procedures and extra judgment. Some keywords: physical verification of inventory, alternative audit procedures, inventory with third parties, litigation and claims, direct communication with legal counsels, segment information, professional skepticism. Okay. Then we move on to SA 505, that is external confirmations. Okay. In auditing, the strongest evidence often comes from outside the entity. When the auditor wants independent assurance, not management words, not internal records, but direct confirmation from third parties. SA 505 steps in. This standard governs how, when, and why an auditor uses external confirmations. Objective of SA 505. The objective of the auditor is to design and perform external confirmation procedures to obtain relevant and reliable audit evidence. What is an external confirmation? An external confirmation is audit evidence obtained as a direct written response from a third party confirming party to a request made by the auditor. Examples: bank balances, debtors, creditors, loans, legal balances. Why external confirmations are important? They provide highly reliability, independence from management, strong evidence for existence, rights and obligations, and valuation. ICAI considers external confirmation high quality audit evidence. Types of external confirmations: positive confirmation, third party must respond in all cases even if they agree with the information, used when risk is high, large balance exists, internal controls are weak. Negative confirmations: respond required only if, used only when risk is low, large number of small balances, strong internal controls, no reason to expect recipient will ignore request. I say test this condition frequently. Control over confirmation process. Auditor shall maintain control over selection of confirming parties, design of confirmation request, sending request and receiving the responses. Management involvement must be limited to avoid bias. When management refuses confirmation, if management refuses audit confirmation, then auditor shall inquire into reasons, evaluate implications on risk, perform alternative audit procedures. If refuses unreasonable, consider impact on auditor's opinion. No response, unreliable response. If no response is received or response is unreliable, auditor must perform alternative audit procedures. Example: subsequent receipts, supporting documents. Silence does not mean confirmation. Reliability of confirmation response is more reliable when received direct by auditor from knowledgeable third party in written or electronic form, electronically confirmed through secure platforms. Documentation is very important. Auditor must document type of confirmation sent, responses received, alternative procedures performed, and conclusions drawn. Okay, so we can say SA 505 strengthens audit quality by ensuring that the key balances are verified directly with independent third parties, reducing reliance on management and representations and internal controls. It reinforces the principle that most persuasive audit evidence is often obtained from outside the entity. Some keywords to remember for this: external confirmations, positive and negative confirmations, control over confirmation process, alternate audit procedures, reliability of audit evidence, and third party confirmations. Okay, now we will do essay 520, which deals with analytical procedures. Okay, figures don't say anything, we just give us some clues. That's where essay 520 comes. Analytical procedures comes in. Auditor only do the vouchers. Okay, so financial or non-financial investigation is compulsory. Okay, so what we do, overall review, can say now we are going to deal with essay 520, the analytical procedures. Okay, what is that? Figures are not only numbers, okay, they give us some clues. Okay, that's where essay 520 analytical process comes in. Auditor only does not only check the vouchers, so relationships analyze, he has to analyze the relationship between those vouchers also. Okay, so 520 says financial or non-financial data is there, and they have a logical consistency should be there between the financial as well as non-financial data. If expectations and the results are different, then investigation is compulsory. Analytical procedures are used when at the planning stage, substantive procedures, okay, for overall review at the end. Simple, we have to an unexpected fluctuation is equal to audit risk. So essay 520, thinking like an auditor, not just ticking the boxes. So it says that if there is a difference, you have to be dealt with in the planning stage and substantive procedures, okay, and overall review at the end. That is the analytical procedures. Now essay 540, auditing accounting estimates and related disclosures. Essay 540, auditing accounting estimates. Not everything in financial statements is exact. Many figures are based on management's judgment, assumptions and future expectations, provision for doubtful debts, depreciation, fair value, impairment. These are estimates, not certainties, because estimates carry high subjectivity and bias risk. ICAI prescribes essay 540 to guide auditors on how to audit them. The objective of the auditor is to obtain sufficient and appropriate audit evidence regarding accounting estimates and related disclosures, and to conclude whether they are reasonable in the context of the applicable financial reporting framework. What are accounting estimates? Accounting estimates are monetary amounts in financial statements. They cannot be measured with precision and depend on management judgment. Examples: provision for expected credit loss, warranty provisions, impairment losses, fair value measurement. Why SA 540 is important? Accounting estimates involves estimation uncertainty, risk of management bias, possibility of material misstatement. Therefore, they require heightened professional skepticism. Risk assessment procedures. Auditor shall obtain understanding of how management identifies estimates, understand methods, assumptions and data used, evaluate degree of estimation uncertainty, identify the significant estimates. Higher uncertainty is also higher risk. Respond to assessed risk. Auditor may adopt one or more of the following approaches: testing management's method, evaluating appropriateness of method, test assumptions for reasonableness, verify data used. Developing auditor's own estimate or range. Independently calculate estimate, compare with management's estimate. Used when auditor doubts management's estimate. Then reviewing subsequent events. Assess events after balance sheet date to confirm reasonableness of estimate. Helpful for provision and impairments. Management is bias. Auditor shall evaluate whether management judgments show bias, consider effect of bias on financial statements as a whole. Repetitive optimism is a red flag. Disclosures related to estimates. Auditor shall evaluate whether disclosures are adequate, estimation of uncertainty is properly explained, and key assumptions are disclosed. Disclosure is as important as the number itself. Written representations. Auditor shall obtain written representations that assumptions are used are reasonable, estimates are consistent with applicable framework. Okay. Documentation should be there. Auditor must document risk assessment, procedures performed, basis for conclusions, indicators of management bias. Okay. In conclusion, we can say SA 540 ensures that accounting estimates are not blindly accepted but are critically evaluated with professional judgment and skepticism, safeguarding the reliability and fairness of financial statements. What are the keywords? We can say accounting estimates, estimation uncertainty, management bias, significant estimates, professional skepticism, sufficient and appropriate audit evidence. Okay. So 550 is over. We will do now with SA 550, related party transactions. Okay. What does it mean? Related party transactions are not illegal, but they are high risk area. Why? Because they may not be at arm's length and can be used to manipulate profits, assets or liabilities. That is why ICAI has issued SA 550, which guides the auditor on identifying, assessing and responding to risks arising from related party transactions, related party relationships and transactions. What are the objectives of SA 550? The objective of the auditor is to obtain sufficient and appropriate audit evidence regarding the identification, assessment and disclosure of related party relationships and transactions in accordance with the applicable financial reporting framework. What is related party? A related party includes related parties as defined under the applicable financial reporting framework. Example, in AS. AS, management and those charged with governance, and entities or persons having control, joint control or significant influence. Auditor cannot assume management has identified all related parties. Why? We have include, what does the risk include? Risk include transactions outside normal course of business, lack of arm's length pricing, inadequate of misleading disclosures, possibility of fraud or management override. Hence, professional skepticism is critical and have to be applied from start to the end of the audit. Risk assessment procedures. Auditor shall obtain understanding the related party relationships, unique, inquire of management and those charged with governance, review prior period working papers, inspect shareholder records and board minutes, remain alert for undisclosed related parties, identification of significant risk. Auditor must pay special attention to transactions outside normal business, significant or unusual transactions, complex transactions with no clear business rationale. Such transactions may include significant risk. Auditor's responses for identified risk related party transactions. Auditor shall inspect agreements and contracts, evaluate business rationale, check approval by those charged with governance, test accounting and disclosures, confirm balances where appropriate. If disclosures are inadequate, modification of opinion may be required. Communication with those charged with governance. Auditor shall communicate significant related party transactions is identified, undisclosed related parties, concerns regarding disclosure adequacy. Written representation is a must. Auditor shall obtain written representations that management has disclosed all related parties. All related party transactions are properly recorded and disclosed. Mandatory requirement under SA 550. Documentation. Auditor must document identified related parties, nature and terms of transactions, auditor's conclusions, discussions with management and those charged with government. In conclusion, we can say SA 550 ensures transparency and fairness in financial statements, in financial reporting, by requiring auditor to critically evaluate related party relationships and transactions rather than relying solely on management disclosures. It reinforces the principle that absence of disclosure does not mean absence of related parties. Some keywords on this topic: that related party relationships, arm's length transactions, significant risk, professional skepticism, disclosure requirements, written representations. Now we move on to SA 560, that is subsequent events. SA 560 deals with subsequent events. In real life, accounts don't freeze on the balance sheet date. Events continue to happen after the reporting date, and some of them can change the meaning of the financial statements. SA 560 deals with the auditor's responsibility relating to such events known as subsequent events. The objective of the auditor is to obtain sufficient and appropriate audit evidence about whether events occurring between the date of financial statements and the date of the auditor's report require adjustment or disclosure, and to respond appropriately to facts that become known after the date of the auditor's report. This objective is highly examinable. Okay. SA 560 covers two distinct periods between date of financial statements and date of auditor's report. After date of auditor's report, auditor's responsibility differs for each period. Types of subsequent events. Type 1, adjusting events. Events that provide evidence of conditions existing at the balance sheet date. Accounting treatment, adjustment required. Example, debtors goes bankrupt after year end due to financial difficulty existing before year end. Type 2, non-adjusting events. Events that include conditions arising from the balance sheet date. Accounting treatment, disclosed only if material. Example, fire destroying factory after balance sheet date. Auditor's responsibility before audit report date. Auditor shall perform audit procedures to identify subsequent events, inquiry of management, read minutes of meetings, review latest financial information, obtain written representations. Responsibility exists up to the date of the auditor's report. Management responsibility. Management is responsible to identify subsequent events, decide adjustment or disclosure. Auditor evaluates, not substitutes management's judgment. Written representations. Auditor shall obtain written representations that all subsequent events requiring adjustment or disclosure have been identified and accounted for. Mandatory under SA 560. Okay. Events after the balance sheet auditor's report. Events that are after the auditor's report. Auditor has no obligation to perform procedures after the audit date. But if auditor becomes aware of the fact that existed at a report date that would have affected the auditor's opinion, then auditor shall disclose with management, determine new need for revision of financial statements, and take appropriate action if management refuses. Documentation. Auditor shall document procedures performed, identified subsequent events, conclusions on adjustments, disclosures, and discussions with management. Okay, so SA 560 ensures that financial statements reflect all material events occurring up to the auditor's report date, thereby enhancing the reliability and relevance of financial reporting. It balances the responsibility of the management and auditor while protecting users of financial statements. Some keywords from this essay: subsequent events, adjusting events, non-adjusting events, auditor's report date, written presentations, disclosure requirement, and these are the main points which you have to remember for essay 560. Now comes essay 580, written presentations. Imagine this is you have planned the audit properly, performed all audit procedures, collected audit evidence, but before signing the audit report, you ask management to put certain confirmations in writing. That written confirmation is called written presentations. That is exactly what essay 580 is all about. What is SA 580? SA 580 written presentations deals with the auditor's responsibility to obtain written presentations from management and, where appropriate, those charged with governance. These representations confirm management's responsibilities and certain matters which cannot be sufficiently evidenced through audit procedures alone. What are the objectives of SA 580? The objective of the auditor is to obtain written presentations to support other audit evidence and respond appropriately if management refuses to provide them. Remember, written representations are necessary but not substitute for audit evidence. Why are written presentations important? Because some matters are based on management judgment related to intent or future actions. For example, completeness of liabilities, compliance with laws and regulations, related party disclosures, subsequent events. Here, auditor cannot rely on documents. Management's confirmation becomes essential. Mandatory written representations. Auditor must obtain written representations that management has fulfilled its responsibility for preparation of financial statements. All relevant information have been provided. These are mandatory under SA 580. Okay, if management refuses to provide written representations, auditor shall reevaluate management's integrity, consider the effect on audit opinion, possibly issue a qualified opinion or disclaimer. Refusal is a scope limitation. Timing and documentation. Written representations are dated as close as possible to the date of the auditor's report. They must be documented as part of audit working papers. SA 580 strengthens audit conclusions for formally placing responsibility on management. It protects the auditor, improves accountability, and ensures reliability of financial statements. In short, we can say no written representations, no clean audit opinion. Okay. So some keywords for this 580. It is audit evidence, scope limitation, auditor's opinion, SA 580, management's responsibility, right? So in one word we can say SA 580 is giving us the SA 580 written representations helps the auditor in forming a base and protecting him against the management's ability. Okay. Now we have SA 402, audit considerations relating to an entity using a service organization. SA 402, using a service organization. Today's companies don't do everything in-house. Payroll, cloud accounting, IT professional, many functions are outsourced, but the audit responsibility stays with the auditor. That's where SA 402 comes in. SA 402 deals with the auditor's responsibilities when the auditor entity uses a service organization that affects the financial statements. Example, payroll processed by a third party, accounting done on ERP hosted by a vendor. The objective of the auditor is to obtain an understanding of the services provided by the service organization and assess the risk of material misstatement arising from those services and design and perform appropriate audit procedures. Responsibility cannot be delegated to the service organization. The responsibility is always of the auditor. The auditor shall understand the nature of the service provided, understand controls at the service organization, evaluate impact on internal control over financial reporting, assess risk of material misstatement. Understanding controls, two options auditor may obtain your understanding through. First is the user entity control, second is reports on control at service organization. Types of reports: type 1 report, design of controls at a specific date, no operating effectiveness. Type 2 report, design operating effectiveness for a specified period, more reliable for audit procedures. When service auditor's report is used, auditor evaluates competence and independence of service auditor, adequacy of report, period covered, relevance of controls tested. Auditor cannot blindly rely. If information is insufficient, auditor may perform procedures at user entity, visit service organization, use another auditor. If still insufficient, modify the opinion. Documentation: auditor shall document understanding obtained, risks identified, audit procedures performed, conclusions reached. Okay, so in overall we can say SA 402 ensures that outsourcing does not reduce audit quality. Even when work is outsourced, audit responsibility is not. Okay. And what are the keywords for this essay? User entity, internal controls, type 1 and type 2 report, risk of material misstatement, and auditor's responsibility. Then we have essay 600. Okay. What does essay 600 says? Using the work of another auditor, crafted specifically. Essay 600, using the work of another auditor. In large audits, one auditor cannot be everywhere. A company may have branches, subsidiaries or components audited by another auditor, but the main audit report is designed by the principal auditor. So the big question is, can the principal auditor rely on the work of another auditor? That's exactly what SA 600 explains. What is SA 600? SA 600, using the work of another auditor, deals with the responsibility of the principal auditor when using the work of another auditor in relation to the financial information of one or more components. The principal auditor remains fully responsible for the audit. Objective of SA 600: the objective of the principal auditor is to determine whether the work of another auditor is adequate for the principal auditor's purpose and decide whether and how the work affects the audit opinion. This objective is in line with very important for the understanding. Responsibility of the principal auditor: the principal auditor shall evaluate the professional competence of the other auditor, assess the independence of the other auditor, obtain an understanding of the scope of work performed, consider the significance of component, perform procedures on the work of the other auditor if necessary. Reliance is based on professional judgment, not blind trust. Responsibility does not reduce. Even if another auditor has been audited a component, principal auditor cannot shift responsibility. Principal auditor remains responsible for risk assessment, audit opinion, compliance with SAs. Very important point. Reference to another auditor in audit report. Normally, no reference is made to another auditor in the audit report, but if required by law or regulation, a reference may be made. Even then, responsibility is not divided. So in conclusion, we can say SA 600 makes one thing very clear: work can be shared, responsibility cannot. The principal auditor may use the work of another auditor, but the audit opinion remains entirely his or her own. Some keywords: another auditor, component, principal auditor, professional competence, independence, audit opinion, responsibility. Okay. Then we go on to SA 700, forming an opinion and reporting on financial statements. Specifically for this CAFinal, we are saying SA 700 is very important. Forming an opinion and reporting. At the end of every audit, there is one powerful sentence that users care about. In our opinion, that single line decides credibility of the financial statements, trust of investors and regulators. SA 700 governs how that opinion is formed and how it is reported. What is SA 700? SA 700 deals with the auditor's responsibility to form an opinion on the financial statements based on audit evidence obtained and express that opinion clearly in a written auditor's report. Opinion is not intuition, it is based on sufficient and appropriate audit evidence. The objective of the auditor is to form an opinion on the financial statements based on an evaluation of the conclusions drawn from the audit evidence obtained and express clearly that opinion through a written report. This is a very important point. Opinion based on audit evidence. Auditor evaluates whether financial statements are prepared in accordance with applicable financial reporting framework, accounting policies are appropriate and consistently applied, disclosure adequate, and overall presentation is fair. Types of opinions. Under SA 700, auditor may express unmodified opinion when financial statements present a true and fair view. If issues exist, refer to SA 705 for modified opinions, okay, which we are going to deal just now. Qualified opinion, adverse opinion, disclaimer of opinion. SA 700 prescribes clear title, opinion section at the beginning, basis for opinion, management's responsibility, auditor's responsibility, and signature, date, place. Opinion section comes first, very important for ICAI. Professional judgment and documentation. Opinion is supported by audit working papers. Okay, sufficient appropriate audit evidence. Professional judgment, poor evidence is equal to weak opinion. Conclusions, we can say SA 700 converts audit evidence into an audit opinion. It ensures that auditor's conclusion is logical, reporting is transparent, users can rely on the auditor's opinion. Strong evidence leads to strong opinion. Some keywords for this essay: audit opinion, sufficient appropriate audit evidence, true and fair view, applicable financial reporting framework, auditor's report, professional judgment. Okay, so this goes SA 700. Now we have SA 701, key audit matters. What are these key audit matters? 701, key audit matters. Communicating key audit matters in the independent auditor's report. When users read an audit report, they often ask just one thing: what were the most critical areas in the audit? Key audit matters, CAM. What is SA 701? SA 701 deals with the auditor's responsibility to communicate key audit matters in the auditor's report for listed entities. CAM are those matters that, in the auditor's professional judgment, were of most significance in the audit of the current period financial statements. SA 701 is which shows the direction to move. The KAM, that is the key audit matters, are transparent, and objective of S701, the objective of the auditor is to determine key audit matters and communicate them clearly in the auditor's report to enhance the communicative value of the audit report. What are CAM? CAM are especially selected from matters communicated those stated with governance and that required significant auditor's attention. Examples: areas of high risk of material misstatement, significant management judgment, complex accounting estimates, major transactions. And what is not a CAM? CAM are not a separate option, a substitute of disclosure, a qualification or adverse remark. Opinions remain governed by SA 700. SA 705. Each CAM should include why the matter was considered significant, how the matter was addressed in the audit clearly, entity specific explanation is required. When CAM is not communicated, CAM are not required for unlisted equities, when it is usually required by law, when law or regulation prohibits public disclosure, when adverse consequences outweigh public interest. Okay, auditor must document reasoning. Documentation is a must for this case. Auditor shall document matters considered for CAM, key audit matters, judgment applied, final CAM selected, reasons for excluding certain matters. CAM explains the audit, it does not change the opinion. Key audit matters have some key points like key audit matters, professional judgment, significant auditor attention, and those charged with governance. Okay. Types of audit opinions. Okay, so SS 700 and SS 705, where 4 types of opinions are there. Unmodified opinion, clean opinion, meaning an unmodified opinion is expressed when the auditor concludes that financial statements are prepared in accordance with the applicable financial reporting framework and they present true and fair view of the material respects. Okay. Proper records maintain, no material misstatements found. Qualified opinion. Again, a qualified opinion is expressed when misstatements are material but not pervasive, or audit is unable to obtain sufficient audit evidence and effect is material but not pervasive. Then another case. So you always remember that there is, if it is material and it is only it is not pervasive, in that case qualified opinion will be given, and if it is material as well as it is pervasive also, in that case it will be adverse opinion. Okay. And if some evidence is not allowed to the auditor, in that case it will be material, yes, and it was pervasive, yes. In that case also scope limitation is, it is the scope limitation given by the management, so in that case it will be disclaimer of opinion. A disclaimer of opinion is expressed when auditor is unable to obtain sufficient appropriate audit evidence and the possible effects of material and pervasive. Then we have the auditors SA 705, modifications of opinion in the independent auditor's report. Every auditor wants to give a clean opinion, but sometimes facts don't cooperate. When financial statements have serious issues or audit evidence is not available, the auditor must modify the opinion. SA 705 tells us when and how to do that. SA 700 deals with the auditors responsible to issue a modified opinion when the financial statements are materially misstated or auditor is unable to obtain sufficient appropriate audit evidence. Modification is based on materiality and pervasiveness. Now we are going to do SA 700, forming an opinion and reporting on financial statements. SA 700, at the end of every audit, there is one powerful sentence that users care about most, that is, in our opinion. That single opinion decides credibility of financial statements, trust of investors and regulators. SA 700 governs how the opinion is formed and how it is reported. What is SA 700? SA 700 deals with the auditor's responsibility to form an opinion on the financial statements based on audit evidence obtained and express that opinion clearly in a written auditor's report. Opinion is not intuition, it is based on sufficient and appropriate audit evidence. Okay, so now we can say that SA 700 says is to, the objective of this SA 700 is to form an opinion on the financial statements based on an evaluation of the conclusions drawn from the audit evidence obtained and express carefully or clearly that opinion through a written report. So, opinion based on audit evidence, that is a core area. Now, auditor evaluates whether financial statements are prepared in accordance with the applicable financial reporting framework, accounting policies are appropriate and consistently applied, accounting estimates are reasonable. Okay, the accounting estimates are reasonable, and disclosures are adequate. Overall presentation is fair. Only after this evaluation can the auditor form an opinion. Types of opinion there are that we are going to deal with SA 705 link. Under SA 700, auditor may express unmodified opinion when financial statements present a true and fair view, right? And if issues exist, then we have to refer to 705 for modified opinions. Okay, qualified opinion, adverse opinion, and disclaimer of opinion. Okay. Disclaimer of opinion. From the auditor's report, we can say the SA 700 prescribes clear title, opinion section at the beginning, basis for opinion, management's responsibility, auditor's responsibility, signature, date, place. Opinion section comes first. Professional judgment and documentation. Opinion is supported by audit working papers as per SA 230, sufficient appropriate audit evidence as per SA 500, and professional judgment. Poor evidence is equal to weak opinion. SA 700, in conclusion, we can say SA 700 converts audit evidence into an audit opinion. It ensures that auditor's conclusion is logical, reporting is transparent, users can rely on the auditor's opinion. Strong evidence leads to a strong opinion. Some keywords you can use in your examinations, like audit opinion, sufficient appropriate audit evidence, true and fair view, applicable financial reporting framework, auditor's report, professional judgment. Okay. Next we are going to deal with SA 701, key audit matters. Okay, what does key audit matters? Communicating key audit matters in the independent auditor's report. That is SA 701's main motto. So when users read an audit report, they often ask just one thing: what were the most critical areas in this audit? SA 701 answers that question through key audit matters. What is SA 701 about? SA 701 deals with the auditor's responsibility to communicate key audit matters in the auditor's report for listed entities. KAM are those matters that in the auditor's professional judgment were of most significance in the audit of the current period financial statements. The objective of the SA 701. The objective of the auditor is to determine key audit matters and communicate them clearly in the auditor's report to enhance the communicative value of the audit report. This line is very important. What are key audit matters? Key audit matters are selected from matters communicate with those charged with governance and that required significant auditor attention. Examples we can say: areas of high risk of material misstatement, significant management judgment, complex accounting estimates, major transactions. What is not a CAM? That is key audit matter. CAM are not a separate opinion, a substitute of disclosures, a qualification of adverse remark. Opinion remains governed by SA 700, SA 705. How CAM are communicated? That is, key audit matters are communicated. Each key audit matter should include why the matter was considered significant, how the matter was addressed in the audit. Clear entity-specific explanation is required. When CAM is not communicated, key audit matter, that is CAM, are not required for unlisted entities unless required by law. When law or regulation prohibits public disclosure and when adverse consequences outweigh public interest. SA 701 enhances audit transparency and user understanding by highlighting what truly matters and most in the audit. CAM explains the audit. It does not engage in the opinion. The important keywords here you to remember is key audit matters, professional judgment, significant auditor attention, those charged with governance, audit transparency, and listed entities. Okay. Types of audit opinions. Okay. As per 700 and 705, there are 4 types of audit opinions. Unmodified opinion. Okay, that is, unmodified opinion is expressed when auditor concludes that financial statements are prepared in accordance with the application of applicable financial reporting framework and they present a true and fair view in all material respects. Okay. And this is the best and a normal opinion. Then we have the 4 qualified opinion. A qualified opinion is expressed when misstatements are material but not pervasive, or auditor is unable to obtain sufficient audit evidence and the effect is material but not pervasive. Opinion is qualified using the words like except for. Okay. Then we have the adverse opinion. Okay, and in the adverse opinion, what an adverse opinion is expressed when misstatements are material and pervasive and financial statements do not present a true and fair view. Example: incorrect revenue recognition affecting entire profit figure. Then we have disclaimer of opinion. A disclaimer of opinion is expressed when auditor is unable to obtain sufficient audit evidence and the possible effects are material and pervasive. So we can say this: records, example, records destroyed, management not cooperating. Okay, so these are the types of opinions we just saw. Now we go to SA 705, modifications to the opinion in the independent audit report. SA 705 is modifications to audit opinion. Every auditor wants to give a clean opinion, but sometimes facts don't cooperate. When financial statements have serious issues or audit evidence is not available, the auditor must modify the opinion. SA 705 tells us when and how to do that. What is SA 705? SA 705 deals with the auditor's responsibility to financial statements. Issue a modified opinion when financial statements are materially misstated or auditor is unable to obtain sufficient appropriate audit evidence. Okay. So, objective of SA 705 is the objective of the auditor is to express a modified opinion when required and clearly communicate the reason for such modification in the auditor's report. Basis of modification, audit opinion depends on two factors. First is the materiality. It is a matter significant. Is the matter significant? Second is pervasiveness. Does it affect the financial statements as a whole? This combination decides the type of modified opinion. Types of modified opinion, qualified opinion. We just did what I qualified. Misstatement is material but not pervasive or unable to obtain evidence. Effect is material but not pervasive. Okay. Then we have the adverse opinion. In adverse opinion, both the misstatements are pervasive as well as materials. It is material as well as pervasive. We give the adverse opinion. Okay, and misstatements, material and pervasive financial statements do not present true and fair view. And disclaimer of opinion: auditor cannot obtain sufficient audit evidence. Okay. And possible effects are material and pervasive. Auditor does not express an opinion at all. Structure of the audit opinion on SA 705 is modified report includes qualified, adverse, disclaimer opinion, then the section, then basis of modified opinion section. Okay. So SA 705 does not belong to SA 706. 705 opinion is modified, 706 opinion is not modified. Okay. As per then we can say it as a whole, SA 705 ensures the honesty in audit reporting. When facts demand, the auditor must speak clearly even if it means modifying the opinion. Clear report builds comfort, modified reports builds credibility. Okay. Then we go on to 706. Okay. 701 we have already done. The next is the 706, that is when the auditor opinion, emphasis of matter paragraph and other matter paragraph in the independence auditor's report. Okay, what is there in this? SA 706, emphasis of matter and other matter. Sometimes everything is in the financial statements is correct. The opinion is clean, but still the auditor wants to draw special attention to something important. That is where SA 706 comes into play. What is SA 706? SA 706 deals with the auditor's responsibility to include an emphasis of matter paragraph or an other matter paragraph in the auditor's report without modifying the audit opinion. Okay. So, what is the objective of SA 706? The objective of the auditor is to draw users' attention to matter appropriately presented or disclosed in the financial statements or to another matter relevant to users' understanding of the audit. Auditor's responsibilities or auditor's report. Emphasis of matter paragraph refers to a matter appropriately presented or disclosed in the financial statements, is fundamental to users' understanding. It does not modify the opinion, right? When we speak the examples, we can say major litigation, significant uncertainty, example going concern, COVID impact, early adoption of accounting standard. Other matters we can say, meaning an other matter paragraph refers to a matter not presented or disclosed in the financial statements but is relevant to users' understanding of the audit or auditor's responsibility or report. Audit of, example we can say audit of comparative information, restriction on distribution of audit report, use of another auditor's where permitted, placement in auditor's report. EOM or OM paragraph is included after the opinion and basis for opinion section. Clear heading, emphasis of matter, other matter. Never mix the two opinions with opinions when SA 706 is not used. When opinion needs modification, SA 705 applies. When matter is a key matter, 701 applies. When 701, 706 and 705 are mutually exclusive in purpose. Okay. No modification opinion. SA 706 enhances transparency without altering the auditor's opinion. It ensures users focus on matters that are important but not opinion changing. Opinion stays clean, attention gets sharpened. Okay, now we have SA 720, revised auditor's responsibility relating to other information. You can directly use this. Okay, you audited the financial statements properly, right? You gave a clean opinion, but in the annual report, management wrote something misleading. Now the shareholders read that and your name is on the audit report. Are you responsible? Because that exactly what SA 720 says. Today we are going to understand SA 720 in a very simple exam-oriented manner. Okay, why SA 720 exists? Understand one thing clearly: an auditor gives opinion on financial statements, but in real life, companies publish an annual report. The annual report contains financial statements, board's report, management discussion and analysis, MD&A, chairman's statements, corporate governance report, CSR report. All this except financial statements is called other information. Step 2. What is other information? As per Institute of Chartered Accountants of India and SA 720 revised, other information is financial or non-financial information included in an entity's annual report other than the financial statements and auditor's report. Perfect. So these are about SA 720. Now the auditor is not responsible for the other matters which is said in the other than the auditor's report. Okay. Here okay, now we go to SA 800, special purpose report, high impact. What happens? Thanks for watching.